So, you sent over this really interesting article, right? And it's from the Motley Fool. It's all about, Warren Buffett
Yeah.
and his recent moves in the market.
Yeah.
And it feels especially relevant now with the S&P 500, being in correction territory.
Mm-hmm.
I think it's like a really crucial time to get a sense of, where somebody with his experience is positioning himself.
Absolutely. You're really looking to get a good understanding of his thinking right now.
Yeah.
And I think, that's what we're going to do today, right?
Yeah.
Give you the key takeaways without, getting too bogged down in the weeds.
Exactly. And when you consider like his track record with Berkshire Hathaway, I mean, almost 20% average annual return over almost 60 years?
It's incredible.
Compared to the S&P 500's roughly 10%? I mean, it's got to make you pay attention, right? When he makes moves, I think we all kind of sit up and take notice.
I think you're absolutely right. His long-term success, I think, offers a really valuable lens to look at the market.
Yeah.
And I think over the past year, we've seen some notable shifts in his portfolio.
Yeah.
Reducing some holdings in Apple and Bank of America.
Right.
Closing out some of his S&P 500 index fund positions.
Mm-hmm.
And, of course, just building up a record cash position. These were maybe the initial signs of, maybe some caution.
Yeah, exactly. And then you kind of layer on top of that, we've seen some economic data recently that hasn't been ideal. And then you've got the ongoing effects of President Trump's tariffs.
Right.
All of that's led to both the Nasdaq and S&P 500 entering correction territory. They've each dropped, over 10% from their highs, right?
Absolutely.
So Buffett's comments, I mean, they feel even more, I don't know, like a louder signal against this backdrop.
Right.
So I guess to understand all this, let's start with his investing philosophy. Like, what are the fundamental principles that really drive his decisions?
Yeah. So at the heart of it, his philosophy is about finding fundamentally sound businesses, buying when they're at a good value.
Yeah.
And holding them for the long term.
Right.
And I think, the classic example of that is Coca-Cola.
Yeah.
He bought Coca-Cola back in the late 80s.
Okay. It
was trading at a pretty reasonable multiple, around 15 times earnings, I believe.
Wow.
And he's held it ever since.
Okay.
So, that kind of patience and that long-term perspective is really what, kind of underpins his entire approach.
And I think for a lot of us, that's something that we all strive for.
Absolutely.
It's tough, but it seems like, in addition to just picking the right companies.
Yeah.
Part of his success has been this willingness to, I don't know, kind of go against the grain a little bit.
Absolutely. He's got that famous quote, right? He says, "Be fearful when others are greedy."
Right.
And greedy when others are fearful.
Right.
And it's this contrarian approach.
Yeah.
Where he's looking for opportunities when everyone else is pessimistic. And you kind of battening down the hatches when everyone's super excited.
Right.
That's been a huge factor in his, outperformance over time.
I see. So it's not just, I don't know, like gut feel. It's more about like a rational, independent view of the market, right?
Yeah, absolutely.
Okay. So that brings us to like all this talk about him selling and this massive cash position. Yeah. The article mentioned that he was a net seller of about $134 billion worth of stock.
Last year, yeah.
Last year, which brings Berkshire Hathaway's cash reserves to like $334 billion. That's a lot of money.
It's a huge number.
What do you think's behind this move towards cash?
Well, the article touched on this, right? And it's the historically high stock market valuations. You probably have you ever heard of the S&P 500 Shiller CAPE ratio?
I've heard of it. Yeah.
Okay, so it's basically this long-term valuation metric, and it looks at the average inflation-adjusted earnings from the previous 10 years.
Okay.
To kind of smooth out, economic ups and downs.
Right.
And this ratio, it reached 37 recently.
And that's significant.
Yeah, that's significant because historically, when the SHPE ratio has gone above 37,
right,
returns over the next 5 to 10 years have been, they've tended to be lower than the average.
So you're saying there's a historical precedent for being cautious at these levels.
Exactly. Yeah. So for a value investor like Buffett, these high valuations mean that there are fewer companies that are, going to meet his criteria for being a good buy.
Right.
Right.
Yeah.
And so holding cash gives him the flexibility to kind of, deploy that capital when better opportunities come along.
Right. So it's like he's waiting for that, that dip.
Exactly. Yeah. Potentially during market downturns when things become more attractive.
Yeah. That makes sense. It's a logical approach, I think, and in line with his philosophy. But speaking of being cautious, we got to talk about his pretty strong words about President Trump's tariffs.
Yeah.
He called them an act of war.
Right.
That's a pretty strong statement from somebody who's, generally seen as measured in his comments.
Yes, he's usually, quite thoughtful and careful with his words, right?
Yeah.
So for him to come out and say something like that is, pretty significant.
Okay. So what was the context of that comment?
So it was during the time when the Trump administration was putting, these tariffs on imports from a bunch of different countries.
Right.
Yeah, China, Canada, Mexico.
Right.
Initially. And then later on, they even added tariffs on, aluminum and steel from basically everywhere.
So a lot of uncertainty for investors.
Absolutely. Everybody was nervous about, what it would mean for company earnings and just for the global economy in general. And Buffett, in this CBS interview, he really didn't mince words, did he?
No.
He came right out and said that these tariffs were, an act of war. Mm-hmm. And he also suggested that they could lead to higher prices for consumers.
And that increased cost, right, it can really squeeze companies if they can't pass it on to consumers.
Exactly, yeah. It can hit their profit margins.
Which obviously from an investment perspective.
Yeah, it makes it less attractive.
Yeah.
Right.
But he didn't stop there though, did he?
No, he didn't. He went on and he made this really interesting point.
Yeah.
About the need to think, and I'm quoting him here, and then what?
Oh, yeah.
When thinking about the impact of tariffs. So what he was getting at was we need to think about who's really bearing the cost of these tariffs and what are the knock-on effects.
Yeah, and it's interesting because he didn't go into specifics about like particular industries.
Right.
But the message seemed pretty clear, right? Like these tariffs are a risk.
Absolutely. To businesses.
Yeah, a drag on the economy.
Right. And potentially, leading to retaliation.
Oh, absolutely. Yeah. Disrupting supply chains. It's, there's a whole cascade of potential negative consequences.
So, we've talked about him being cautious. We've talked about, all this cash he's holding.
Yeah.
We've talked about tariffs. I mean, it's easy to think that, okay, he's basically saying get out of the market.
Right.
But the article also pointed out that he hasn't, completely given up on stocks.
That's a really important point.
Yeah.
He might be cautious.
Yeah.
But he hasn't sold everything.
Right.
He's still a long-term investor at heart. Right. And he believes in, buying and holding quality businesses through different market cycles.
So it's more about being selective than panicking.
Exactly. Yeah. It's about managing risk and being smart about your investments.
Okay. So even with all these challenges like tariffs, what you're saying is that we should be focused on the individual companies. Right. You have to look at the fundamentals.
Right.
Right. Is the company strong? Does it have good business model? Can it navigate these challenges with the tariffs?
Right.
And if so, then a market downturn could actually be an opportunity.
Right. Right.
It all comes back to that idea of being greedy when others are fearful.
Right. So in a way, almost like a contrarian opportunity.
Absolutely.
Okay. And it's interesting because the article even gave some specific examples of him, still investing.
Oh, yeah.
Even though he's a net seller overall.
Yeah. In the latest quarter, they opened a position in Constellation Brands. They're a big beverage company.
Right.
And they also added to their existing investment in Domino's Pizza.
Okay.
So even in this environment, he's still finding opportunities.
So for someone listening who's trying to navigate this S&P 500 and Nasdaq correction and make sense of Buffett's signals.
Yeah.
What's the actionable takeaway? Like what should they do?
Well, I think the biggest takeaway, and this really goes back to, his core approach, is to really focus on the long term and, to look for value, during a correction like this.
Right.
This is the time to find those great companies. The ones with, strong financials, a real competitive advantage.
Yeah.
And a proven track record.
Mm-hmm.
And if their prices have come down,
right,
because of, the broader market worries, well, that could be an opportunity.
Okay, so it's not about getting out. It's about becoming more discerning.
Exactly.
And finding those businesses that might be on sale, right?
That's it. Yeah. Okay.
So I think this has been really helpful. I think you've really clarified a lot of what Buffett's doing. So just to quickly summarize for our listener, Buffett's increased his cash holdings. He's expressed concern about tariffs, which is the sign of caution.
Right.
Especially with these high valuations.
Well, that's right.
And the potential for, some economic headwinds. But we want to make sure that it's clear, right? This doesn't necessarily mean abandon ship. Right?
Yeah, absolutely not. Get out of the market.
It's about sticking to those core principles, right?
Yeah.
Long-term investing.
Yeah.
And looking for, those good deals.
Yeah.
Those value plays. So our final thought for you, Buffett has this amazing history of navigating all sorts of market conditions.
He's seen it all.
Yeah. How do you think, knowing what he's doing now with these high valuations and the whole tariff situation, I mean, how does that affect your own investing strategy and how you think about risk?
It's a great question.
Yeah. Maybe something to think about. And even, maybe explore some of these metrics like the Shiller CAPE ratio as you make your decisions.
Great advice.
Yeah. Thanks for joining us for this deep dive.
It's been a pleasure.
Really appreciate your insights.
My pleasure.